On Mondays, we are joined by Jeff Peterson. He's the president of Heartland Farm Partners. On today's visit, we chatted about 2020, looking back on the year in terms of corn and soybean markets. We began the conversation talking about how corn started the year and where it's at now.
We're looking at the March futures of where we were at last year versus this year, and what's amazing when we compare that price, 64 cents a bushel higher is where we're at now. So we were $3.88 last year at this time, sitting here this morning coming in around $4.52. But what's even more amazing is we look at, as we progress through the year, we know that actually the price of corn got lower, got all the way down to $3.04. So if we look at from where that low was on up, we're like $1.48 higher than it would have been off the low.
$1.48 for corn. What were some of the biggest factors driving the market, particularly as it hit some of those low points throughout the year?
You know, it's really an interesting year. So if you widen back time, we got to think about phase one trade deal kicked off in January. So we had that come in where we had some additional trade start happening. And then we ended up having COVID come in, and we just crushed our ethanol industry, unfortunately. And that's really what caused our first pull down. You know, in the middle of April, we pulled our prices all the way down there to the almost $3. And then over time, we got to think about what else was going on out there. Well, we had some issues with getting this crop planted. And what's amazing is the way we kind of look at this, Bryce, is we say, okay, what was the market expecting for acres? Well, it ended up coming in with 6 million less acres. And then on top of that, it ended up coming in with about 2.7 bushels less on the yield side. So the production side came down, numerous reasons for that we saw. And demand overall, surprisingly, on corn wasn't too much different. It was only about 25 million bushels higher. Even though we get a lot of talk about how the big export numbers are coming in, and they are big exports, but what they've done is they've kind of helped take over some of the other pullbacks and some of the other demand categories on the corn side.
Let's go from corn to soybeans now and bring us back to last year. Where were we sitting price-wise?
Yeah, that's what's really interesting. If we sit back, if we go back and take a look at this time, and what we're looking at is the January futures, we'd be at $9.39 last year at this time. We're $3.29 a bushel higher. But what's even more interesting than that is that at one point, as we got into April, prices got all the way down to $8.30. So when we take a look at that level, we're $4.38 higher than we would have been on the lows. So we've had some big swings on the soybean side.
Has it been the exports driving the soybean demand?
Oh, tremendous exports on that side. And that's what's interesting about the soybean side is as we look at that, soybeans weren't as impacted by the planting problems that we had. Acres were only down about 400,000. Acres compared to what the trade kind of thought and compared to what the May WASDE report showed. The May WASDE report would have been the first official estimate that would have came out for the 2020 crop. And believe it or not, the yield actually was up about 9/10. So what we've got, we had production issues on corn. Actually, it's been demand over on the soybean side. Demand overall is up about 215 million bushels more than what they were expecting. And in the end, where the big things show up though, Bryce, is on those ending stock numbers. Think about this, at one point on corn, when we started off in May, 3.3 billion bushels of ending stocks is what we thought we were gonna have, and now we're sitting at 1.7 billion. So we pulled that down over about 1.6 billion bushels. And then as we look over on the soybean side, 405 million is what we were talking about back in May. And now we're sitting there just a little bit over 170. So those are some big adjustments on ending stocks.
Week from now, we'll be in 2021. What are you going to remember most for the marketing that we've seen in 2020?
I think the biggest thing that I'm going to sit back and remember is that we have to always be prepared for those unexpected items. You know, when COVID came in and put a lot of pressure on that market, you know, we have to also realize that we have to stay patient, and we also have to not be fearful when we see these markets pull back like this, because we can see this market bounce greatly if you get the right conditions.